Tim, what do you think about this social media play gone wild, 50%, way ahead of anything else in its group, even Pinterest, which is only up 38%?
Yeah, absolutely has gone wild, certainly from the lows here. As Alex alluded to, looking at, forget about earnings, they'll be negative and will continue to be. But we've seen revenue growth, as he talked about, probably growing 15% year over year. Yet the stock in that same time frame is up over 60%. So you've seen this huge expansion in price to sales, pushing towards 20, which is the highest level ever on the stock since it IPO'd. So certainly valuations for what they matter in this kind of, momentum-driven, free money-fueled market getting extended here. But I'm looking at that 20-day moving average. It's really held that since that COVID rally began here. So that's around the 24 level. I think that 13% market maker expected move is way overstated. When you look at the last three earnings reactions, we had an up move, a down move, and roughly a flat move. So I think unless earnings absolutely knock it out of the park from a revenue and guidance perspective, probably a slight pullback here. But I think it'll be tempered by the fact that money is virtually free and the rally will continue. So I'm just playing for a pullback towards that 20-day moving average. Like the fact I can sell this week's, slightly out of the money puts by next week's, capture almost a 60-point implied volatility differential on that. So like capturing that term structure vol, paying just 30 cents, playing slightly bearishly here, looking for the stock to, kind of pull back towards 24, just slightly lower than where it's trading at. Only have 30 cents at risk, so I like that especially.
I like your point, too, about the recent earnings reactions. Snap is no stranger to volatility. Last one gapped up, but the one before that gapped down. So we've had quite a bit of swings around this. So your point here is using volatility to construct this straddle as we've gotten such a big pump up in vol. Is there risk to the vol disappearing? I mean, how do you kind of gauge the price movement versus the volatility component in a stock that moves so much?
Yeah, this one's just a simple, put calendar spread trade. So just paying 30 cents on that. So I like the fact that the stock does pull back towards that 24 level where it's, kind of held on the 20-day moving average. This thing could be a doubler or tripler, to say the least. If not, you're risking just 30, probably can get out of it with something regardless here. So very low risk, very high return here. I think really given with Snap that 13% implied move, these front week options are really juicy. So you want to be selling those and then hedging with next week's. And again, capturing that big IV differential really makes this trade a cheap one. So it's as much a vol capture trade as it is a slightly bearish trade on Snap post earnings.